Hello everyone, and welcome to our webinar this afternoon. Today we'll be looking at pricing for the new retail landscape, and I'm going to allow a few seconds for everyone to come on board so that they're not missing anything. I'm absolutely delighted today that we have a panel together, and we're taking a slightly different approach today. Each panelist will say a few words, and then after that, we will have a really engaged Q&A and an open discussion on your various questions. I was delighted to see such a large number of people registering for today because it's an extremely important topic. No matter how beautiful your design and your production and execution, packaging, branding is, if it is not priced correctly, you will either sell too much and be making a loss, or sell too little and it would sit on the shelf. So with that, I would like to introduce our speakers today. We have Siobhan Flynn, who's a retail sourcer and retail expert. Followed by that, we have Jenny Hewison, and Jenny is a designer and maker and is the proprietor of Edge Only. And then taking up the third position, we have Donal Horgan, and Donal is a chartered accountant who has experience of working with many small businesses who have a lot in common with craftspeople, and he also has a number of craft clients. So that's the scene set. We will be coming from the three different aspects, and I hope today is comprehensive and engaging for you. So with that, I'd like to welcome Siobhan. Thank you very much, Siobhan.
Thank you, Emer. I'm just going to go ahead and share my screen. Just bear with me. So thank you very much, Emer, and thank you to the Design Council for holding this, I think, really interesting and important chat about pricing for retail. And I just want to say right off the bat that, you know, we're calling this pricing for the new retail landscape, and there is a new retail landscape, but I think it's probably important to note that that pricing really hasn't changed. So as long as you were formulating your retail prices correctly, including everything that you're meant to include, really the process is the same. Great, so we'll move on to retail pricing key considerations. And I am here to talk about it from the retailer's point of view, but also how you get to that retail price as well. And so my first question to all of you, or the question that I say to you, is that you should be asking yourself always, have I correctly determined my cost prices? And I'm just going to briefly go over this because I know that Jenny has some key insights on this. So I'll leave that to her. But this is such an important question, and it's essential to analyze your costs. And I think sometimes when we think of costs, we think of raw materials and everything that we needed to actually make the product. But it's not just the silver that you need for your jewelry, or the clay that you need for your ceramics, or the paper goods that you need for your or art materials that you need for your illustrations. No, it's your fixed costs, it's your variable costs, and everything in between and after. So I'm going to look at this from the point of view that you already know what all your costs are, and leave Jenny to go through with that with you. So I'm assuming that you have a firm understanding of all your costs. You've designed your product, you've produced it, and you're ready to bring it to market. And once you have all that done, now you're ready to tackle your retail price, whether it's for direct to customer sales, wholesale, or both. Determine what your product is worth. This is so important, and it's a really simple question, but it's really a starting point for everyone, no matter where you are in your business, no matter if you're at the start of your business or you've been working along for many years. I think always having to look back at what your product is worth is vital to determining what your end prices should be. So to consider this, you've got to know who your target customer is. And you already have an idea of who you want to sell to, whether that's your retailer or the end user. But how do you do this? I think always the best way to do this is to look at your competition, to look at like-minded designers, producers that are creating items that you consider to be comparable to yours. So how do you do this? Going into retailers that you also look to as a place that you may like to become a stockist, or a stalker, I should say. So it doesn't matter if it's a bricks and mortar, if it's an online store, do your research. Find products that look similar to yours or feel similar in value. What are they pricing their items at? And how are they being presented? Is it in line with your vision? Is it in line, are their customers like your customers? So this is really important to knowing how to price your products, if you're overpricing, underpricing, or if you've got it right on target. And now that you have the idea of what your retail price should look at, no matter how tedious it is, I always recommend that you work your prices not only from the bottom up, but also from the top down. And this seems like a really silly sort of rudimentary exercise, but it's really important because the information that you can gather from it can be really important. So what do I mean by this? Well, it's really simple. I mean, normally we'll say, okay, I've got all my costs, and now how do I get to my retail price? So I'm adding, depending, let's say you're wholesaling and you're selling direct to your customer. So I have my cost price, and now I need to tack on my margin. That brings me to my wholesale price. I need to tack on my retailer's margin. I need to tack on that, and that's going to bring me to my selling price, my SPTI, so selling price tax inclusive. So you've got everything here. So what is it? Say like you've come to 150 euro for your item. At the same time, you've decided, yes, I'd like to retail my product at 150 euro. Then start taking away and see what you come down to. If they match, you've done a great job, but more than likely they haven't matched. More than likely they haven't. So you've got to go back, you've got to rework it, you've got to really look into the finer details of your costs. You've got to make sure you've left yourself with a profit margin. You've got to make sure you've given your retailer a profit margin. You've got to really drive down into all the numbers. It is tedious, it absolutely is, but it's worth every minute. Now, pricing with different revenue streams in mind. So I know for some of you, you might be thinking, well, I have no intention of ever wholesaling my products, and that's fine, that's okay, but you are selling maybe direct to customers. You're still a retailer. So I always think it's nice to think of your business in two different segments. So the production arm of your business, or the design arm of your business, but also the retail arm of your business. So think of yourself, the retail side of your business, as a client for the design part of your business. And you also have to purchase from yourself. So if you think of it like that, then I think it makes it a little bit easier to understand that you've got to build in all of these elements in order to get yourself to a price where you can not only create beautiful products, but also really make a living out of it, really have a viable business. But also, what's really important here is that even though you may say that you have no intention to wholesale, you should always approach your business with growth in mind. And part of that growth may, in 2, 3, or 5 years down the line, possibly blossom into a wholesale business. There are some wonderful benefits to certainly selling direct to your customer, absolutely. But there are equally benefits to wholesaling your products. To established retailers that already have a growing or stable customer base, you have an audience already. You already have a customer base that you didn't have before you became a stockist in that bricks and mortar or online business. So I think it's important to be open-minded with that. It doesn't even only have to take the form of a traditional wholesale arrangement, but it could be possibly a partnership or a collaboration. I think having an open mind and always pricing yourself so that you can, at a later stage, move into wholesale or move into collaborations or create other revenue streams. But what's really important when you do that is that you have had to have kept the retailer's margin in mind. So always keep it to the fore. The retailer is not there to just highlight your products, just to sell your products for nothing. They also have costs. They are also in it to make a profit. So the same as you are trying to make a profit from your business, they are also trying to make a profit from their business. And what we're looking for is a partnership that is mutually beneficial. So I always recommend align your prices with what you think or with what the retailer would want. So consider your margin, consider the retailer's margin, consider your VAT, and bring your prices in line so that you can, in future, retail your products in a bricks and mortar or online retail business. And also keep in mind the difference. So this may seem a little bit simplistic, but it's an easy thing to get confused by. Keep in mind the difference between the cost price and the wholesale price, because buyers use these terms interchangeably, and it's a very simple thing. Your cost price is clearly different from my cost price as a retailer. Your cost price is what it costs you to produce your goods, but that's not my cost price. My cost price is what it costs you to make your products and your profit or your margin on top of that. So I think there's probably, it's again, like I said, it's a very simplistic sort of thing, but it can get very confusing when we're all sort of saying, no, this isn't the cost price or this is the cost price. Also, when you're pricing, keep negotiation in mind. So now when I am talking about negotiation here, I'm definitely talking about when you're negotiating with a potential retailer, or maybe it's a current retailer. When you go into a buyer, you should always remember that it is the buyer's job to negotiate. The buyer will always look for a discount, always. Now, the discount doesn't always have to take form of a financial discount. It can be given in other ways. However, there's always some negotiation in mind. So what I always suggest, and you know, I feel sometimes I have to put a different hat on, because as a buyer, I don't really like saying, well, you should pad out your prices so that when I come into you to purchase from you and I ask for a discount, you've already built that into your price. But that is what I'm saying, that you should always make sure to price your products so that you have a discount built in, So when I come to you to ask you for, well, you know, I need you to give me a little bit more margin, you've already built that in. You are already covered. You're not losing margin here. And if I don't ask, well, then that's fantastic, because then you have made yourself a little bit of extra margin. So really important. And I know I said that there are other ways to give this bar discounts, and there absolutely are. You know, they're not necessarily anything to do with pricing, but certainly exclusivity on certain ranges. You know, it could be a special line, or you know, a particular product or colorways or anything like that. So there's lots of ways to work around these negotiations, but the easiest way is the pricing. Make sure you've padded your pricing in order to protect yourself from what the buyer will inevitably ask you. And the bigger the buyer, the more likely they will ask you for discount, the more likely they will expect a discount, and they will also expect a certain margin. So if you have set your prices, your RRP at a 2.5 markup, and they're a store that normally requires a 2.8 markup, if you haven't set your wholesale prices to include that little buffer, then that's going to be problematic for you. There are also things that you can do. The larger the store, maybe larger the order, you can offer some discounts there as well. Now the next line, I say price with discounts, markdowns, and promotions in mind. And I'm not talking about the discounts I was just discussing with you, even though they do overlap. But here it's more like if you are a stockist within a store, often you will have to partake in promotions, or if you are retailing direct to customer, you should always be considering discounts that you will have to take, or markdowns that you may have to take. As much as we would like to think that all of our products are beautiful and that they'll all, I suppose, have you know, a fantastic reaction from our customer base, it's unfortunately not always the case. There are always lines within your overall range that, you know, just don't work, and we've got to protect our overall business. So when we have to clear down certain items, and this is the same for a retailer, when we have to clear down certain items, we've got to make sure that we've built in enough of a buffer in order to protect the rest of our business. So we can clear out certain items, but we have enough built in with our other items that we're still making a profit. And then, of course, and this is really one of the most important points, and I'm sure you all know this, but sometimes it can be difficult. Price with perceived value in mind. And this goes back to what I was saying earlier about price with the idea of what the customer is willing to pay, okay? We know if I say my product is worth 250 euro, but people are only ever willing to pay 200 euro, then I've overvalued my product for sure. If I, on the other hand, say I've priced my product at 100 euro, but it's flying off the shelves, maybe I need to consider that I've undervalued my product. So we need to find a place where you can, and this is why it's important to actually really analyze your pricing structure, really look at what your competitors are doing, and especially those competitors that seem to be turning over, or their sales turnover is increasing. So do not devalue your brand or product by pricing too low. It's an easy thing to fall into to say, well, I'm going to price lower so that I can be more competitive. And that's great, you know, and it's understandable. There's a little bit of reticence in putting prices on products, but I think it's really important to remember the USP of your product. you know, and for this particular audience, that for the main, you are makers, designers, craftspeople here in Ireland. That in itself has such a huge added value. It's something that Far East sourced products can't compete with. So it's really important to price according to the handmade nature of your items. So trying to find that happy medium of not pricing too low, not outpricing yourself where you're not competitive. It's not easy. It's easy to put these slides together, and it's easy to go through the points, but it's not an easy exercise to really drive down into the details and figure out where in this retail landscape your prices should be. And I'm sure Jenny can speak to it even more so than I can. It is an exercise, and it is absolutely tedious. But you know what? Like, it's important now to sort of flex your math muscles and really, you spent so much time creating these beautiful pieces. So it's worth the time spent in getting your prices spot on, so you can increase turnover, so you can increase viability of your business, so you can really, I suppose, stay focused and on that path to growing your business. So I hope that's kind of helped a little. And I'm going to pass you over to Jenny, because I know that she has some really interesting insights into retail pricing. So thank you very much.
Thanks, Siobhan. Hi, everyone. I'll try to share my screen now and get the slides up just to remind myself. Oh, where am I? Okay, and 2 seconds as I fight with technology. Okay, sorry, starting in the middle. Okay, so I mean, Siobhan's touched on so much of this, and I think most of us are always fascinated by what retailers want, and having access to somebody like Siobhan that's a buyer is so invaluable, particularly when it comes to things like margin, because it's really hard. There's no one right way to price your product, you know, and it's figuring out what's right for you. And certainly one of the struggles I think we all face is figuring out what that is, and part of it is that positioning that we want. You know, are we hoping to be in Brown Thomas and Selfridges, or are we hoping to be in Irish craft shops? And there might be different markup expectations around that. So whether or not you are pricing direct to consumer and deciding, you know, particularly in light of COVID-19 and coronavirus, and it's been such a stressful time for retail, maybe you're thinking, forget it, I don't want to do retail anymore, I'm just going to focus on my online. It seems like the safer way to go for the year ahead. And I can understand that sentiment. Or if you're thinking, no, okay, I'm wholesale, or maybe now I'm just going to focus on both. I'm going to continue with my wholesale customers, and then I'm going to try to build my online. And that's where I am. I've always been somebody who did both. I started out thinking and hoping to be online only, but that wasn't really realistic for the market that I'm in, because touch and feel are so important, and also positioning, that sort of luxury feel of a store really helps. So, so that's just a few things around pricing for growth, and thinking about that pricing as you move forward, particularly if you're thinking online is the way to be and I'm just going to go direct. It's really important that you think about that direct price and allowing you to even develop your online brand properly. Really just to massively encourage you to take this time with everything that Siobhan's saying and all the insights that Donal will give you, to price for the brand that you want to build rather than the brand you are now, because I'm guessing that, like me, you're nowhere near done. You're not where you want to be just yet, that you're hoping for much greater volume and to build your brand into something more international, or that maybe the goal is just to have help. Maybe the goal is to have full-time staff or more staff. Maybe the goal really is to have incredible packaging next year, or to have a beautiful website by the end of the year. But all of those things are part of growth, and all of those things cost money to build. So even if you're thinking, I'm not going to do wholesale right now, I think that if you're planning on selling wholesale in 2 years' time, it's going to be incredibly difficult to change your prices then, especially if you come up with a bestseller. So if you've got a bestseller at a direct price, you need to be able to think about how you're going to switch to wholesale down the line. And if you think, no, I really am not going to be going into wholesale, maybe you're going to want to hold your own pop-up shop. Or maybe you have eyes on having a concession within a department store, which is, as Siobhan sort of highlighted, another kind of form of you being the retailer, because a pop-up shop is going to have additional rents and staff costs. And whether that's a commission split, as is very popular, a lot of galleries and pop-ups, you pay a commission, you're going to need to have the margin in which to participate. So just to make sure that you have the ability to take advantage of all the different opportunities as they present themselves. And you know, some of those sort of tips and advice that I really wish somebody had said to me 5 years ago, you know, would have stopped all those sort of legacy pricing errors and things like that. So it's just my hope that I might highlight 1 or 2 things for you to consider, especially as summer is the perfect time as we're getting ready to launch collections and gear up for a busy autumn, winter and Christmas season. And one of the things, and Siobhan touched on this a bit, it was, do your overheads and wholesale price account for all the needs of retail? Because right now, retail, it's really tricky out there in bricks and mortar. COVID-19, it was tricky before COVID-19, and it's certainly trickier now. And they've got much lower volumes of people going into the store, but it might mean that those people coming in are much more motivated. If you've queued to go into a shop and you've had to go through the hand sanitizing and wearing a mask and all those things, chances are you're really there to do some serious shopping. So it might be that it's a higher converting rate of customer, you know, it might be much actually better turnover for those shops. We certainly hope so, but we don't know just yet. But the important thing is that the retailers are going to want beautiful packaging. They're going to want incredible print and display. And if your product is something that needs to be in a beautiful branded box, is the cost of that beautiful branded box in your wholesale price? Does it need a gift bag? Is that something that your competitors have, but you haven't yet been able to sort of put together? Well, have you allowed for the price of that? Or maybe you've got quite a large catalog at this stage and you really want to be able to encourage people to buy your other items. So you want to have a beautiful brochure available at your display within your retailer. Or maybe that store really just needs to be able to tell your story better and romance the customer about your handmade product, or why your product is better than the competition that is maybe made in Asia. And that's those point of sale assets. And a lot of people talk about POS and they're just talking about point of sale. And it might be that beautiful photograph of you or you in your workshop, or just the product itself and the heritage or history around that product. Whatever it is, chances are now more than ever, retailers are going to be looking for those things. And they're really expensive to make. And they're going to hopefully want you to supply them. And that might be a way for you getting that spot in the retail shop compared to your competition, because you've got better print packaging and point of sale. Or maybe you're realizing that you've been turned down in the past because you don't yet have that. And the only way to afford to do that is if you're pricing allowing for that packaging and that print. And certainly for me, you know, in my early years, I didn't have a bag yet. I had beautiful boxes and print inserts, but it took me a couple of years before I made my custom bags. But in those first 2 collections, I hadn't priced allowing for a bag. So then now that those bestsellers are still there, all of a sudden then it becomes tricky because I now need to include the cost of that bag. So did that early margin allow for that? So it's that thing of pricing for the product and the brand that you want to be, even if you're not quite there yet, because it's really difficult to increase the price as you go along. And it's something that comes up for all of us now. I mean, I've slowly increased prices, but it can be tricky to do that. And depending on how large you are or how big your customer base is, particularly if you've been direct and are moving into wholesale, they have an expectation of this really low direct price. And suddenly you're moving into marking up at a higher level. So so that can be challenging, but it's something that you can communicate with your customers. You can explain. COVID-19 is a perfect time to kind of go with the changes or with increased costs due to shipping, or prices have gone up on my materials or whatever. We've had to adjust for X, Y, and Z, but it's tricky. So it's better if you get it right. And one thing you can do is have each new collection be at a different price, and price it differently, but then you're still dealing with sort of legacy pricing issues. So as much as possible to really think about all that print, display, and packaging. And then again, as Siobhan talked about, is that markup you're offering high enough for retailers, particularly with mind to VAT? Because one of the things, you know, with Edge only, it wasn't something that came up very often. I sort of struggled to get my head around VAT when I first started. You know, like most of you, I'm a creative, my background's in media. I'm certainly not an accountant, and I'm delighted that Donald's here to help us with all of those things. But I really had to get my head around VAT. And to make sure that you're really allowing for it in your pricing, particularly if you're not VAT registered. And chances are, if you're a new business or small craft business, you might not be turning over the threshold that forces you to charge VAT. So it's too easy to forget about it and think, I don't need to charge VAT. I'm not VAT registered. But you need to price for it. And you absolutely need to think of your retailer and yourself down the line in factoring VAT into your price, or you could be charging, your pricing could be out by 23% essentially. And if you think about how a 25% discount or even a 20% discount, sometimes that hurts. So if you don't have your VAT in your price properly, then you're already making a mistake of 23%, which isn't a great starting point. So it's really important to think, because often, you know, I look at pricing guides all the time, and Shopify have an excellent one. If you're sort of looking in the online store, Shopify have a great sort of blog about how to price for wholesale and retail. But of course, they're North American. So in North America, the tax is on top. So they never mention tax when they're giving pricing advice. And a lot of the guides that we look at, maybe even Etsy and places like that, they never really talk about including VAT. But in Ireland, the VAT is included in the retail price, which means that the retailer has to divide the retail price that you suggest for them and divide it by 1.23. So if you're saying that your retail price is €50, the retailer's actually only getting 40.65, and immediately 9.35 goes to the government. So it's really important to think about your price as being 40.65 if you're direct, or that 40.65 is what you're offering the retailer, and figure out if that margin is good enough for them. Will they be happy with the 40.65 because they don't get 50? And the minute you sort of start thinking about it that way, always remove the VAT from your RRP, and then figure out, is it the price that the retailer is going to be happy with, or that you're happy with direct? Because again, you know, Siobhan talked about all those important VIP discounts or sales. You know, even Brown Thomas as a luxury store has customer evenings where they automatically will offer 15 or 20% off, and chances are you need to be able to participate in those. So your price should easily be able to take that 20%. And you know, more than that, I know can be a struggle for some people, but you have to be able to at least do that. And then if you do want to participate in pop-ups or concessions, chances are it's going to be at least 25%. You know, galleries, artists are used to it being 50%. So if you can price allowing for those opportunities down the line, then it won't hurt so much when they come along. But if you've already got the VAT built in incorrectly, then it's the 20% off and the 23% off, and it just starts to become crazy. And all of a sudden you've priced yourself out of every opportunity by pricing far too low. So my tip there would be, is if in your head you've all along been thinking €50, and €50 is what you need, then you need to add VAT to the €50, and your price should really be $61.50, because the VAT on the 50 is, you know, the 11.50. So think about that, you know, whether or not you're okay with your price being 40.65, or if it is 50 that you need, then maybe you need to change that price to 61.50 or €60 or 59 or whatever that might be. Or maybe you realize, oh jeepers, I'm going to be doing packaging, I'm going to be doing a box, maybe I should just go for it and be 65. So that would be my first tip. It's something I wish that I'd really had hammered into me in my early years, and certainly try to think about much more so now as I move along. And just an example from my own Shopify website, just to sort of show you that, you know, I've sold something, but it already, as you know, for the customer and for me, shows that the 23% VAT was included. So I didn't get, and I don't get 159. So whether I'm VAT registered or not, whether or not I'm paying that VAT. Now I am VAT registered. I chose to be from the start because there was advantages for me that I'm sure Donal will touch on. But really I need to be thinking about that price as being $129.27. And always working mentally with that price, because it's too easy to get excited by our RRPs and forget about that 23% pesky VAT. It's just one of those things that really surprised myself and Emma with the loss, was how many people were retailing for quite a long time. And as part of that pop-up, we took 25% commission to cover staff and packaging and point of sale and display and all the many things that was being taken care of. And when we explained that the 25% commission, I mean, it comes off that €129 because the VAT goes to the government. It's nothing to do with your retailer. So it was nothing to do with BLOS, but that 25% commission comes off the 129. And people would think, a few people sort of said, oh, you're taking 48% because you're taking 25 and you're taking 23% VAT. But of course it's not like that. The VAT's always gone. So you need to mentally and be really clear. The VAT is always gone. That's the government. It's nothing to do with retailer, and really work with that price after VAT. And then you're onto a winner. Then you're in good shape. So again, just to sort of some of those things that, to factor into your overhead, Siobhan talked about assuming that you have all your costs right, because none of us can have them exactly right. It's almost impossible for us to price exactly right, because we make a brand new product hoping that it's going to be a bestseller. And maybe we've taken all of our mold and sampling and production costs, so master models, or maybe if it's fashion, it's sampling abroad. Maybe there's multiple iterations that you need to make before you get to a product that you're ready to sell. So all those costs, plus all of your wages, all of the shipping costs, so all those costs built in. By the time you've done that, have you also thought about your marketing and PR costs? So if you're an online brand, have you allowed for product photography and modeled photography and lifestyle photography? Because if you're lucky, you only need product and lifestyle. But if it's something that needs to be on a model, then you also need modeled photography. So that's 3 different ranges of photography. And if you're thinking online is going to be so much easier, I get a much better margin than I do if I'm wholesale. Yes, that's true. But you also need a really fantastic website with 2 to 3 times as much imagery as you needed, probably just going wholesale. So to bear that in mind. And then if you are going online only and direct, are you a coder? Are you really good with your website? Do you really understand search engine optimization and user flow and user navigation? Are you able to build out that website, or are you paying somebody else to build out that website? And then with that, okay, great. Maybe you are really good at doing the website and you can do all that. But if you're also the maker, or if you're also managing production, do you really have the time also to be doing all those things? So maybe you do need to hire somebody to help either then with packaging and logistics or production, or to help with the website. So that's another cost that you need to factor into those wholesale, interior sort of overhead costs as part of your wholesale costing. And then to really think about, all the different add-ons that might be needed for a website. Unfortunately, we build a website and you go, great, it's done, but I'm already, working on the 3rd iteration of my website, and new apps and new expectations. Our customers have become so savvy online, and the coronavirus has been a wonderful thing in getting more customers comfortable online and with shopping that way. But they've really demanding expectations around customer service and care and plugins and mobile phone. Is it responsive to your mobile phone? Is it really easy to use? All those things. And then if you've built this beautiful website, how are people going to find it? So then are you going to market it? Are you going to do Facebook ads and Google ads, or do you need to hire a digital marketer? So to actually put all of those costs into your overhead costs, because they're going to need to be. Otherwise, all of those costs are going to be coming out of your profits, and then you'll never be able to hire that help or have that growth or be sustainable in a sort of really realistic way. So to kind of mentally think about all those things and do your best, because with that brand new product that we come up with, so we've taken all those costs, and obviously I can't with jewelry. I can't take an earrings and necklace and go, I'm putting all my website costs onto the cost of these, lightning bolt earrings. But I might think, okay, I'm going to sell 100 of those earrings. And if I sell 200 of them, great, I've made back all of my sampling costs and master models. But if I only sell 30 of them and they're not the success that I'm hoping for them to be, then I haven't made back all of my costs on that particular design. And we all create a product that doesn't sell as much as we'd hope. It would be fantastic if that wasn't the case, but chances are there's a colorway or a certain thing in a collection that just wasn't the winner that you hoped it would be. And maybe that one was a loss. So if you have a full retail margin, if you've built, as Siobhan recommended, your cost price, your wholesale price, and then a full retail markup, at least it gives you that cushioning to allow for all those extra new expenses that might come down the line, and also to offset all of the kind of slight flops. Now, hopefully as time goes on, we have less and less in them, but realistically, Gucci, Prada, everybody, Tiffany, everybody has sellers that are new products that don't replace their best sellers. So it's always better to have that cushion for yourself and to think about it down the line. So really, I'll let Donal sort of enhance and answer all the sort of nitty-gritty questions, because my accountant would laugh at me doing anything to do with VAT, but just to really think about VAT. And even if you do want to be direct to consumer, stay wholesale, or do both, which is probably the best of both worlds, to really think about the different costs for both, and to make sure that you're really well covered, and that you have an opportunity down the line, either to have your own concession or to do a pop-up, or to really break into retail and to sort of edge out all the competition, and have a business that allows for you to hire staff and pay yourself a living wage, and more. Because I think that's all of our goals, is to be able to pay ourselves reasonably and pay our staff reasonably. And Donna will talk about the sort of turnover for being VAT registered. It's not that high, and that turnover threshold is really around viability. So our goal should be to be paying VAT. So rather than seeing it as the enemy, I think if you see paying VAT as a sign that you're doing well, then it'll be something you hate less. So that's it for me. I'll hand over to Donna.
I mean, it's been really wonderful to hear both yourself and Siobhan this far. Could whoever has repairs and renewals going on next door to them, and I've narrowed it down to Donal is innocent because he's got his ear.
Me, unfortunately. It's
inner city Dublin. So I think we'd be able to either knock them on the head or put on earphones, Jenny, for the remainder, because it's been so wonderful that I don't want to lose the momentum. So now I'm going to keep quiet, and I'm going to hand us all over to Donal. So with that, thank you very much, Donal.
Hello, guys. Thanks, Siobhan and Jenny and the Craft Council, Emer and Mary. Can you all hear me?
Yes.
Yeah, great. And can you see a slide there in front of you?
Yes.
Lovely stuff, lovely stuff. Well, we'll move on to the first of two slides. We'll try not to put you to sleep, and we'll just talk a little bit about the legal background. VAT, it stands for Value Added Tax, and we are legally obliged to register for tax if our sales reach a threshold of 75,000 if we are selling products, and if we're supplying services, then the threshold is only 37,500. And they are the points at which we must register for VAT. Up until that point, until our sales reach those points, we have a choice as to whether we register or not register. And we would call that an election. So we can elect to register for VAT, even though we legally have no obligation to register for VAT. And there's three main reasons why we might choose to do that. The first one is it may be a public contract, and our customers might be large customers, and sometimes your own customers will, I suppose, be to a degree distrustful of people that are not VAT registered, because they will consider it as being not tax registered, which is an entirely different matter. But sometimes there's a misunderstanding as to what a VAT registration actually is. Secondly, if we have a VAT number, we're entitled to import products out of the EU at 0% VAT. And at this point, I should warn you all, if importing from the UK, remember the UK are about to leave the EU at the end of this year. So internal VAT rates in the UK are 20%, and that's going to apply on all imports. And that's going to be a VAT charged by the UK government. And the third main reason might be if in a startup or spending significant amounts of money on capital. So if you're buying new machinery, or if you're fitting out a shop, or if you have to incur large expenditure, there can be a significant amount of VAT that if you're VAT registered, you're entitled to reclaim the VAT element of those purchases. So even though, as I say, under law, you might have no obligation to register for VAT, it might be in your interest to register for one of those few reasons. The second little technical thing on VAT to consider is the basis of accounting for VAT. And there's two main bases. The first one is an invoice basis, which means you account for VAT in the period in which the invoice is raised. And the second one is a cash received basis, which means you account for VAT in the period in which the cash is received. Now, the cash received basis is only for the smaller companies, but a smaller company can be quite large in that the turnover must be under 2 million euros. Or alternately, if 90% of your turnover is from an unregistered person. Unregistered people are just people that are not registered for VAT themselves. So they're the kind of technical things you need to consider in the background. Must you register for VAT? And if you don't, should you register for VAT for your own reasons? And oftentimes the answer can be yes. So moving quickly along, there are 5 main rates of VAT. The vast majority of products and services will be charged at 23%, which is the normal VAT rate or standard VAT rate. Then the next bunch are what they call the reduced rate, and kind of the things you'd be familiar with would be electricity or gas would be charged at the reduced rate. The second reduced rate is the 9%, which was allowed for, a lot of it was the entertainment industry and the hotels and hairdressers and that kind of thing. Although that has been severely restricted in more recent times. And then the last 2 rates are more to the farming community, 4.8% for livestock and 5.4% for a flat rate farmer. But for us in practical terms, generally speaking, it's 0%, 23% or 13.5% are the kind of applicable rates of VAT that you'll need to consider. And then I'd like you to look at the little blue insert and just consider on the VAT front, when calculating VAT, we add VAT. It's an add-on cost. So if you're selling at 100 euros and your VAT rate is 23%, you've got to add VAT of 23, so your price becomes 123. But most of our customers, they kind of don't be thinking in those terms, and all they think about is what is the price. And if the price is 100 euros, we got to work backwards to find the VAT amount. And the VAT calculation is actually 23 over 123, or 18.7%. So if you're working back from a retail price, or if you see a price listed in a shop at 100 euros, the amount of VAT embedded in that product is 1870. And the technical calculation is the ex-VAT price is 8130, to which you add 23%, 1870, and you add the two together and you get the 100 euros. So I hope I'm not confusing anybody, but that's how VAT is calculated. I suppose then, to come back to what the girls were talking about earlier and trying to figure out what's your margin or what's your cut, we've got to figure VAT into the calculation, because if VAT registered and you are charging VAT on your product, you are also entitled to a VAT credit on your purchases. So if we consider in a retail operation, the retailer or the shop itself might want a margin. Of course they'll want a margin, and if we allow that at 30%, then in this example your sale price into that shop is going to be 56.91, to which you add VAT of 13.09 to get the 70 euros. The shop will then mark up and will sell for a 30% markup, already a 30% margin, and they'll sell at 100. But your cut is the 70 euro minus your VAT. And then your input costs will have various rates of VAT depending on the type of cost that you're dealing with. Now, the majority of cost will probably be materials at the 23%. So again, if you work backwards and try and figure out what is the VAT content of your cost, because remember, all of that VAT you will recover in your VAT return. So again, if I move over to the right, I've done a little summary on how the VAT calculation would happen, in that the VAT on your sales, the element to you would be 13.09, and the VAT on your purchases in this context is €6.08. So you would have to write a check to revenue in this example of 629. But it all depends entirely on the mix of cost and on the rates of VAT embedded in those different mixes. Now, VAT can be as complicated or as simple as you choose to make it, I suppose. But like the girls were saying, it's vitally important that you should understand it, so that you understand your own pricing, and you understand at the end of the day that when the end user pays for a product, you want to know how much of that money is going to remain in your pocket, and you want to maximize that to the best extent possible. So that's my very short 5-minute view of the VAT world. It can be a complicated thing, but if you think it through, it's made up of 4 or 5 constituent parts, and if you can get your head around the 4 or 5 constituent parts, you'll have no great difficulty with understanding VAT into the future.
Donal, that was very clear, and
okay.
thank you very much for printing it out or portraying it in that way. I find it very clear, and I think our audience will also have find it clear. Now, I know your presentation may have been shorter slightly than the other ladies.
Yeah.
However, there are a couple of questions here. Now,
sure.
I'd like to preface this with the following. You'll probably, if you can see the chat box, you can scan to there are 2 examples there that I'd like you to look at. But just prior to that, what I'd like to say to everyone is after today, if anyone needs mentoring, assistance, help and support in this area, please write to me in confidence. It's not a matter of someone such as Donal doing your accounts for nothing. It's if you have a genuine issue with the costing and pricing of your collection, because I passionately believe that it's so important that, I mean, as Jenny and Siobhan said earlier, no matter how beautiful the design, how well executed it is, if this particular thing is not correct, you're really in difficulties. So, Donal, if you want to just scan down there, can you see in the chat box?
You can, yes.
Yeah, can you see the first one there? Totally challenged by raising my price. I threw out a question if anyone has any difficulty with their price. So would you be able to deal with that one first, and then maybe we'll move on to one of the others? Is that okay?
It is, certainly.
Because it'll make it clearer for everyone if you work through an example, I think. Okay,
so the recommended retail price is €25, and of this you get 7. Well, that would seem extremely low. I'm worried 25 is too much for the end customer. Curated gift book. Okay. Now, printing, you picked a good example. Printing is a little bit more complex than most things. A lot of printing is at 0%, but a lot of printing is also at 23%. So it's trying to find out exactly what the material is. A curated gift book, I would suspect, is probably a VATable product at 23%. Now, then we got to determine whether or not you are VAT registered. I'm going to assume for this, to make it simple, that you're not VAT registered. €25. I mean, it really comes down, is the customer going to pay €25? If they are, then I would up my prices immediately. Who is the distributor of the products? There's not a whole lot of information there. Could you come back, Jenny, and let us know? Is it Jenny Dempsey asked the question?
Yes.
And could you come back and give us a little bit more, Jenny? Because there must be a middleman there somewhere. Is there a retailer involved? Because the retailer would be getting an enormous split of the €25.
Okay, Donal, whilst Jenny's coming back with that further information, do you see one down, how do I calculate my own wages as business owner? Do you see that one?
Yes.
Okay, maybe you could pick up on that one, please.
How do I calculate as a business owner on a monthly basis if I do not forecast the monthly sales? And I take out my wages at the end of the tax year when I oversee my earnings. Okay. Okay, I'm going to assume for the moment that this person is what they call a sole trader. So they're not employed by their own company. And in the taxation of a sole trader, it is really irrelevant how much a sole trader takes out of their business from a tax point of view, because legally there is no distinction in law between the person and the business. So therefore the amount of money that you actually draw out of the business is completely irrelevant to how the profit of that business is calculated. Now, in that context, we will calculate your accounting profits at the end of the calendar year and make a return to revenue in October of the following year to calculate how much tax is owed in respect of the tax year. So in the tax year 2020 that we're currently in, we won't report our profits to revenue until October 2021. And it's only then that we will calculate, or sometime between January and October of 2021, we will calculate the profits and therefore the underlying tax that's owed. But how much actual wages are drawn out of the business is kind of irrelevant. And I have used several times an example of a farmer, funnily enough. And the farmer has two sons, and he gives his two sons 50 cattle each. And he says, out on your own now, young men, out into the world and make a way for yourself. And son number one works hard, and he puts every penny he has back into the business. And at the end of the year, he's got 80 cattle. But son number two takes 20 cattle on the first day down to the mart, takes a big wad of money, and he goes into the pub and he stays in the pub for the year. And he ends up at the end of the year with 30 cattle. Now, the son that has a tax bill is the son that's got 80 cattle and no money. Whereas the lad that spent the year enjoying himself, he's got no tax bill. But he's drawn out a huge amount of money out of the business. So the drawings from the business aren't relevant from an income tax point of view, unless you are operating through a company. Because in the situation where you're a company, then the company is a separate legal person and is a distinct person in law. And the company will return its taxes in its own right. Now, if you draw money out of your own company, even though you might consider it drawings, legally it's not. It's a wage, and you are meant to withdraw or withhold PAYE taxes, pay-as-you-earn taxes, as you would do for any other employee of the business. So I suppose the first thing is to figure out, is the business a sole trader, which is the normal trading situation for small businesses, or is it a company? And if it's a sole trader, as I say, the amount you withdraw from the business is irrelevant from a tax point of view. But at the same time, I suppose you got to be thinking of, are you making profits? And if you're making profits, there is a future tax liability coming down the road at you. And that's the one you got to be conscious of. And if you overspend from a personal spending point of view, you might be in trouble with the taxman, but it might take a couple of months before you get there.
Okay, Donald, that's great. You know what I'm going to do? The full answer and more details just come in from Jenny. However, I think I'm going to move over to our other Jenny to give you a little bit of a rest for a second.
Okay.
And muster yourself together to answer that question. Okay, Jenny Hewson, I have one for you, right? That's you. Okay, with no hammering.
Sorry about that.
What are okay? They're building 2 extra stories on Jenny's block.
Yeah.
That's the reasoning, and they just decided to start hammering just as we started to speak. Okay, yeah. Jenny, what are your thoughts on sailor return and consignment?
Yeah, it's tricky. I think early on in your business, particularly in the world of jewelry and also in fashion, it sort of depends on your product, whether or not it's something you're going to come across more often or not than others. But it's more and more of the world is moving towards sailor return because, of course, it's in the retailer's interest. They get to have your beautiful product. If it doesn't sell, there's no risk to them. So they're delighted when newbies come along and say yes to sailor return. But it might be the only way you can convince them to take a chance on your product, especially if you don't yet have all those beautiful print and packaging and point of sale sort of materials and proof yet that your product, that there's a demand for your product. So if it's a beautiful shop and you think they'll really take care of it and they have an excellent customer base and they're going to do wonderful things, then it might be worth doing sailor return for a short period of time. I would always put an end to it. I tried it with a couple of shops in my first year or two in business where I said, I'm willing to try this for 3 months, or I'm willing to try this for 6 months, and then you need to move to wholesale. And you have to practice, you have to put your money where your mouth is in that regard. And with one of them, they did move to wholesale, and the other, they still tried to push for a sale or return, and I just pulled the stock. So I think you have to sort of stick to your guns that way and decide what you want. But the one thing I wouldn't do is sale or return on wholesale. I don't agree with that personally. I know there's people out there doing it in Ireland. I don't think that's fair. I think the whole point of wholesale is that they're getting the price, they're getting your product at a lower price so that they can mark it up, but you're getting money up front, you're getting cash flow. Whereas a direct sale, you could be waiting a lot longer. You might sell much, you might wait a long time to get the same size of order, but you're getting all the money. So to do sale or return on a wholesale defeats the purpose, because there's no incentive then. If you start sale or return, forgive me for being tongue-tied, if you're sale or return with them already, why would they ever move to paying you wholesale? They just won't. So if you're doing it at a wholesale price, there's no incentive. Whereas if it's sale or return on a commission, is really the point that I'm trying to make, that if they're only taking, say, 30% sale or return, then there's a motivation towards them moving to wholesale because they will get a better markup afterwards. So that would be my advice, is to, if you think it's a lovely shop and you think it's exposure to a nice customer base and good experience for you in getting your name out there, I would try to negotiate a commission so that it's still advantageous for the retailer to move to wholesale down the line. And be prepared to put a time limit on it. Does that answer that question okay?
Siobhan, sale or return on wholesale? You're on mute, Siobhan. Mute. Siobhan?
Sorry.
Thank you, Siobhan.
Yeah, I agree with Jenny. Sale or return is a really tricky one. And, I've certainly have experience with sale or return as well, and sometimes it can work, and it can work nicely. And normally the retailer would take a smaller margin, and there's a trade-off there because they're not taking the risk, they're not buying the stock. But it is sort of a really tricky area because there are other factors involved. There's stock loss or damage. Who's responsible for that? I think a lot of new artists or new designers are so anxious to get their stock into stores that they sort of forget about all those details because the retailer doesn't own that stock. So what happens if it's damaged or stolen while on their property? Who's responsible for that? There's a lot of details in there that really need to be looked at and really need to be agreed before starting that contract. And then I think there's something that I used to refer to as a pay on sell agreement, which is probably more like a consignment. And in that case, it is more of a commission base as well, which does protect you a little bit more. There's nothing wrong with sell return. And like Jenny said, as long as you trust the retailer, as long as it's the right environment, and as long as it has an end point, absolutely. The whole purpose of sale or return is because you are a new brand, a new designer, and you don't have a proven track record of sales. So the retailer is taking all the risk in bringing you into the store. You're taking the risk because you're not taking payment up front, but they're giving you an opportunity. Now, what I would say is when you are doing sale or return is to make sure that you have some control over where you are going in the shop and that the salespeople really understand your product. Because remember, probably 90% of the stock in that store is own bought. So they are definitely going to be looking to sell that product. So where is the onus on the sales staff to sell your product? So there are a lot of factors here. It can be a little bit of a minefield. I'm not saying it's not worth it. Just be careful. Just be careful. And I think Jenny had said that. Yeah.
Great. Thank you very much, Siobhan. We now have the detail for you. Donal, have you digested all
Yes,
of that?
I have, and Jenny, I can happily tell you that it does look like, yes, a printed book is 0% for sure. So you have nothing to worry about from a VAT point of view. In fact, it might even be more to your advantage to register for VAT, because when you have a product that is, there is actually VAT on it, it's just the rate of VAT happens to be 0%. But that's the ideal situation, because you can legally then recover any of the VAT that you pay on your input costs. So if you're paying rent, or if you're paying motoring expenses, diesel, you can recover all of the VAT on that quite legitimately by being VAT registered. And the product that you're selling is a 0% product, so it doesn't affect the sales price. In some of the text that you sent me, Jenny, you mentioned that you thought VAT was, the VAT rate was exempt. Now, VAT exempt is a very peculiar VAT rate. It's applicable to doctors. So doctors' services are VAT exempt. And the distinction between a VAT exempt product or service and a VAT rate of 0% is that in the VAT exempt situation, you're not entitled to recover the VAT on your inputs. So VAT on rent or rates or light and heat and so on. But when it's a 0% product, then you can recover the VAT on your input costs. So in that case, it might be worth your while, even though you may not need to. It might be worth your while to actually register for VAT. Now, educational books are exempt from VAT, actually, yes, whereas regular books are 0% rate. So I'm tripping myself up. We want to check the detail on what type of book it is. But there is a distinction between a VAT rate of 0% and a VAT exempt. One, you can recover all of the VAT on your inputs, and the other you can't. So I hope I've properly confused you.
No, Donal, I think that was great. You've got a thanks in from Jenny.
Oh, good.
I'd like to thank our other Jenny today. I've had a lot of thank yous in from everyone, and I'd really like to thank our audience before I thank our panelists, because what they say about webinars is it's all about, well, I don't know, well, I think it's more all about content and what you're learning, but I'm told from my digital marketing pals that it's all about retention. The retention rate in this series has been absolutely fabulous, and today it has been 100%, which I think, considering the topic, which is vitally important, I think that's a credit to the three of you, Jenny Hewison, Siobhan Flynn, and Donal. And everybody is saying, you know, thank you so much. What an education. Thank you, everyone. Thank you. We've got little hearts as well, goodness me. So useful. And thank you for all the information and a brilliant webinar. Another thank you. Thanks a million, everyone, from Biddy's Good Luck Horseshoes, which is really nice. And I must reiterate to everybody, you know, there is no such thing on this platform as free tax advice, but if anyone is stuck, and I mean stuck, and there are witnesses here and it's being recorded, please write to me in confidence, and I'll see what I can do from mentoring. And we have, oh, a compliment for me, goodness, I'll take that handy. Thank you for putting this panel together. Brilliant, brilliant to get all this information. So on that note, I'd like to thank our audience today, and particular thanks to Donal for racing across the country, although I told him he could do it remotely. I'd like to thank Siobhan, and I'd like to thank Jenny. So thank you, everyone. And hold on, just one last question, maybe. Yeah, it's another thank you. Thank you so much to the speakers. I didn't do that. I actually didn't do that, Donal. I thought I was going to get some more free advice for our clients. But listen, we'll call it a day at that. And listen, the three of you, thank you so much for being with me today. Thank you.
Thanks, everyone.
Thanks.
Thanks.
Good luck.
See you guys.